Hello, good morning. You've tuned into CNBC-TV18. You're watching Power Breakfast, and I'm Vinny Motiwala. And it's a very special day for us. Like you can see behind me, we're celebrating 25 years today at CNBC-TV18. And I would just like to thank you all for always joining in with us every day to get your updates on the market. So 25 years of CNBC. Thank you so much for being there with us always here on the show. But let's move on and start the show today and look at what the Asian markets are doing this morning. A mixed opening is what we're watching out for in the Asian markets today. While we're seeing the Hang Seng is holding on to some bit of a gain, Taiwan index is holding on to gains right now. But what is not doing well on the Asian market front? We have Nikkei, that's a bit subdued on trade, down 0.7%. And we have the ASX 200, that's the Australian index, that is also not holding on to decent gains. So yes, some bit of a mixed opening is what we've seen coming in for the Asian markets. But let's look at the Nifty implied open. What's the indication coming in on that front? Some bit of a positive bias and a positive start as of now is what the indication is coming in for the Nifty implied open. Very muted, 16 points just uptick as of now. Let's see where that's headed, because yesterday we had seen a very good session, especially in the second half of the day. We'd seen a good move coming in. So where the Nifty is headed, that's what we're watching out for. Nifty implied open 24,781 is the Nifty implied open as of now. 16 points of uptick on that front. But let's move on and talk about US markets, because what's the handover on that front? Wall Street, that ended lower, retreating from the records that the major indices hit in the previous session. Now Dow Jones falling 248 points, S&P 500 down 11 points, and the tech-heavy Nasdaq was down almost 35 points. Investors are now awaiting that November jobs report that is there, anticipating that it will provide a clear picture into the health of the labor market and shape the Federal Reserve's rate decision, which will be taking place at its December 17th and 18th policy meeting. Let's go across to CNBC's Bertha Combs, who's here to give us a wrap on what happened on the Wall Street. Bertha?
U.S. markets were down marginally across the major indexes Thursday as Wall Street awaits Friday's monthly jobs report. The Dow was down 248 points. The S&P 500 fell 11, while the tech-heavy Nasdaq was off by nearly 35 points. A federal judge has rejected a plea deal between the Department of Justice and Boeing over a criminal fraud charge stemming from two fatal crashes of its 737 MAX airplane. The plea deal would have required Boeing to admit it deceived the FAA about critical safety issues tied to flight control software on both those doomed flights. The judge also cited issues with the selection process for a government-appointed monitor, pointing to the requirement that diversity, equity, and inclusion policies be used in the monitor selection process. Victims' families have long opposed the deal, saying it does not do enough to hold Boeing accountable. The judge gave Boeing and the Justice Department 30 days to decide how to proceed. And the New York Police Department releasing two new photographs of a person of interest in the shooting murder of United Healthcare CEO Brian Thompson. That shooting occurring in New York Wednesday. The pictures are the first to show the full face of the suspect. An NYPD official tells NBC News it appears the gunman left writings on 3 shell casings with the words "defend, deny, and oppose," a phrase that echoes the book Delay, Deny, Defend about insurance claim denials. That's what's happening here in the U.S. Back over to you in Mumbai.
Thanks for that. But let's now get some expert opinion from the former Cleveland Fed President Loretta on Fed's inflation flight, a state of the U.S. economy, and more. Listen in.
The basic narrative that the Fed wants to, as the economy is normalized, bring interest rates to a more normal level is still intact. And I think he's right. If you look back at when they started to reduce rates in September, right, they were clear that they had more confidence now that inflation is going back to 2%. And they did, that was why they cut rates and began the cutting cycle. But they did 50 because I think they were worried about the downside risk to the employment part of the mandate. And some of the inflation readings have been a little bit firmer than they would have liked to have seen. But that doesn't change the basic narrative that the economy is normalizing. They want to bring rates into a more neutral stance over time.
That's all the overnight global market action that you saw coming in. But how are these cues going to be impacting our Indian market? We have a research team joining in with us this morning. We have Abhishek as well as Mangalam here to tell you what are we setting up for in terms of trade. But first, let me start with a quick look at how the trade setup is looking like this morning. So yes, markets ended higher for the fifth straight day yesterday. We saw the Nifty doing quite well, closed about the 24,700 mark, and this was the highest closing that we saw coming in for Nifty since October 21st. IT index, that did well. Nifty IT was among the top sectoral gainers. Record high for Nifty IT as well. We saw Infosys, TCS doing well, leading the gains for Nifty IT. And what is positive and continues to be positive in the month of December is the FII flows, because yesterday also the foreign institutional investors invested almost 8,500 crores in the Indian markets. And that, we've seen that positive move and buying coming in from FIIs in the last 3 trading sessions. So keep an eye out on that. That's going to be an important factor to watch out for going forward as well. RBI MPC meet, that's a key event that we're watching out for today. Other than that, FI activities, Bitcoin, where is that going to be heading? That's also something watching out for. And in the Asian markets and other markets, let's watch out for the political situation, especially in South Korea as well as France. What's going to be happening on that front? That's key to watch out for in trade. But let's go across to Abhishek, who's here to tell us which are the important stocks to watch out for in trade this morning. Good morning, Abhishek.
Good morning, Vinny. So to begin with, Garden Reach will be in focus. They have signed contract for construction and delivery of second ship from series of 4 additional vessels of about 7,500 deadweight tonnage, multi-purpose vessels. Afcon's infrastructure, they have completed the longest tunneling drive for Delhi Metro Rail Corporation in Delhi Metro Phase 4. Now, Ola Electric, they have got further communication from CCPA seeking additional documentations as well as information from the company. Now, CCA has provided a timeline of 15 days to submit the response. CCPA is Central Consumer Protection Authority. Now, Wari Energies has got NABL accreditation for advanced testing labs. Shriram Pistons will be in focus. They have renewed their technical collaboration agreement with Fuji Japan for a period of 5 years. Nykaa, over there, the CEO, that is Nir Parekh, has resigned from Nykaa Fashions with effect from 5th of December 2024. Spandana Spurti will be in focus. This is the second MFI lender who has got action from the rating agencies. ICRA has revised their outlook to negative from stable. They say that the company has breached about 823 crore of bonds and term loans that they had to pay. And they have also received early redemption request on 196 crore of NCDs from their debenture holders. Canara Bank will be in focus. They have got RBI approval for divesting their stake in Canara Robeco AMC up to 13% and Canara HSBC Life up to 14.5% via IPO. And SEBI has barred Mishtan Foods from raising public funds for a period of 7 years. Back to you.
Okay, thank you so much for that, Abhishek. But Mangalam is here to tell us what are the important FNOQs today that we are watching out for. Good morning, Mangalam.
Good morning. So it was an incredible day in yesterday's trading session. Why do I call it incredible? Because one, it was fairly volatile. Bulls ended on top. And if you look at both the high and the low of the Nifty in yesterday's trading session itself, you would see that the range was extremely wide, nearly 500 points for the Nifty. So there you see it was absolutely flat. Thereafter, there was an up move. And then we saw a bit of a down move and then a sharp up move thereafter as well. So look at the high and the low of the Nifty, 24,295 and 24,858 tells you a range of nearly 500 points itself. The key indices that we're watching, the Nifty Bank and the mid-cap index, the Nifty Bank outperformed a little bit. We had, the mid-cap index as well and the IT doing well. But because it's the RBI policy day, we will most definitely watch out for all the financials and banks as well, whether there is a CRR cut coming or not. FIIs buying in cash for 3 trading sessions is a big positive. Yesterday's purchase was almost $1 billion. And the first time that FIIs have bought more than 3 sessions in a row since September 13th itself. That's one part of the market. The other part of the market is FIIs buying in index futures and covering their short positions as well. So if you look at the FII action in index futures, a net purchase of 2,400 crores. Thereafter, you had 28,000 long contracts being added and 9,000 short contracts being covered. If you just take a look at FII action in futures this entire week, you would see they started the week with a negative 1.24 lakh contracts, which were on the net side. And now that's come down all the way to a negative 45,000 contracts itself. and the long positioning coming down from long positioning coming up from 33% to 44%, and the short positions coming down from 67% to around 56% as well. The FI net exposure is the lowest since October 7th itself. The Nifty has crossed the 50 and the 100-day moving average. The key to watch out for now will be where the Nifty goes from here on. The active options include 24,500 put, telling you there is strong support out there. If we cross that 24,900 mark, then all the way up to 25,000 is what we are opening ourselves up to. All of this happens on what the RBI policy denotes. So just keep an eye out on RBL Bank. The stock has exited F&O ban.
Okay, thank you so much for that, Mangalam. Keep an eye out on the FAQs as well. But on that note, we're going to slip into a very short break. After the break, we'll talk about RBI's MPC meet. What is the expectation there? So stay tuned in. Welcome back. You're watching Power Breakfast on CNBC-TV18. Let's move on and talk about the MPC meet, because MPC will announce its rate decisions today, and this is amidst a sharp slowdown in growth and persistent inflation. What are we expecting this time? Ritu Singh is joining in with us to give us the CNBC-TV18 poll. Ritu.
The sharp slowdown in growth has put RBI in a very uncomfortable position. There is a growing chorus for a rate cut, including from government officials, at a time when high inflation, which has now breached RBI's tolerance threshold, continues to be a spot of bother. Now, the CNBC-TV18 poll shows that 7 in 10 economists do not expect the lower GDP print to accelerate the rate cut cycle, and they believe the primacy of inflation is going to prevail for now. The MPC is expected to leave the repo rate unchanged at 6.5% for the 11th consecutive policy because of lingering inflation concerns, and also because of the volatility in global markets, because a rate cut at this point can also accentuate the pressure on the currency. So instead of going for a rate cut, the governor could address the growth concerns with a dovish commentary, which will lay then the foundation for a rate cut in the next meeting. In fact, an overwhelming 90% of respondents expect to see the first rate cut from the RBI in the February meeting, and the total quantum of rate cuts is seen between 50 to 70 basis points. Now, while a rate cut is ruled out with inflation above 6%, there could be an explicit acknowledgement that growth needs support, and as a step towards an eventual easing, the RBI instead may go for a CRR or a cash reserve ratio cut. But the respondents are pretty divided on the possibility of this happening, with only 50% seeing the chance of a 25 to 50 basis point cut, which could ease some of the pressure on the banking system liquidity. Now, the GDP forecast, that is likely to grab all the eyeballs. 70% of our respondents are predicting that the RBI will lower its FY25 growth projection to 6.4 to 6.7%, and 20% foresee a revision all the way down to 6 to 6.3%. Now, on inflation, half the respondents expect the MPC will revise its projection for FY25 upwards to about 4.8 to 4.9%, while 40% are expecting a more modest increase. Now, apart from the policy rate decision, the RBI statement is also expected to focus on liquidity management, because systemic liquidity has been impacted because of increased forex interventions, and the government's cash balances have also been volatile. And so our respondents believe that the RBI will continue to manage liquidity through both main and fine-tuning operations. That's as far as the policy is concerned. Of course, markets also want to see what happens with RBI Governor Shaktikanta Das's tenure, which is supposed to end on the 10th of December.
Thank you so much for that, Ritu. But let's listen in to the expectations from the CNBC-TV18's Monetary Policy Committee panel on the RBI's decision.
Let me take the vote first. The first question I'm going to ask my panel is, what will the Reserve Bank do to interest rates on December 6th? Sajid,
we have a cut in February, so a hold in December.
Hold, okay. Nothing, no action. Samiran? Soumya?
We are hold.
Okay, hold.
Very similar to Sajid, the hold now and cut in
Okay,
February.
none of you want a cut. Sonal?
25 basis point repo rate cut.
Okay, there you are. We have the first cut. And Dr. Sen?
Hold.
Hold. Okay, so this is 4:1 in favor of holding. Let me take the CRR question. Your thoughts, your vote.
Some liquidity management for sure, not necessarily CRR, but some liquidity management.
I'm taking a no for CRR.
But some liquidity.
Okay.
Yeah.
Shaumya,
I would paraphrase it saying that CRR should be used as a counter-cyclical tool.
no or yes?
Some, not headline CRR, but yes on some specific products.
Okay. Yes, I'm going with a yes for Shaumya. Shaumiran.
I think it is likely, it's possible to do.
Okay, I'll take it as likely then, which is more a yes than a no. Sonal?
Yes, CRR cut.
Okay. Dr. Sen?
No.
Okay, all eyes are going to be on the RBI's decision. So stay tuned in to CNBC TV18. We'll be taking you all through all of that through the day. But let's move on. And Finance Minister Nirmala Sitharaman will begin her customary consultation with key stakeholders ahead of the Union Budget 25-26 as the part of the budget setting exercise. FM will be meeting several prominent economists later today, while she will meet stakeholders from the MSME sector as well as the farmer associations and associations tomorrow as well. So keep an eye out on that front. But on that note, we are going to slip into a very short break. Don't go anywhere. We'll be back with what's happening in the world of commodities with Manisha after the break. Thanks for staying tuned into Power Breakfast on CNBC TV18. And we do have Manisha who's joining in with us to talk to us about what's happening in the world of commodities this morning. Good morning, Manisha. Our OPEC meeting, that's done. What are we expecting now from crude, gold? What are we looking at this morning?
Well, yes, the markets are still reacting to the OPEC meeting, and they have decided, as expected, to maintain current oil production levels for first quarter of 2025. So now the OPEC will only increase production from the second quarter of 2025, and that those increases will go on from until third quarter of 2026. As of now, OPEC and allies are currently holding or withholding 5.86 million barrels per day. So that is what the markets are looking at right now. And then the U.S. crude inventories also saw a bit of a decline, but the crude production in U.S. is at a record highs, and that's weighing onto the markets, is the reason you're looking at $68 back for the WTI crude prices. But there also is pressure in metals. Almost everything in precious metals, industrial metals, is trading into the negative because of the rebound in U.S. dollar and in the strong U.S. Treasury yields as well. There has been a modest rise in the U.S. weekly jobless claims, but the street will watch out for the U.S. non-farm payroll data. That comes in today with an expectation that you would have seen jobs addition of around 200,000 for the month of November.
Okay, Manisha, thank you so much for the update coming in the world of commodities. But onto the big political headline, Devendra Fadnavis took oath as the Chief Minister of Maharashtra last evening. The grand swearing-in ceremony took place at Mumbai's Azad Maidan with PM Modi and other ministers in attendance. At the ceremony, Eknath Shinde and Ajit Pawar took oath as Deputy Chief Ministers. Business leaders and Bollywood personalities also graced the event. Reliance Chairman Mukesh Ambani, Aditya Birla's Group Chairman Kumar Mangalam Bilra also attended the ceremony. Okay, and with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Bazaar Morning Call up next.